with you on the markets and a lot of the sectors that are, of course, catching the eye. That is Manish Sonthalia. The markets are holding on to a cut of about, I think, 0.5%, just a little over 0.5%, 1991 points. And that's the kind of market that we have, at least for the time being. Let's focus on some big developments in the oil and gas space, specifically this tariff revision that came in for GAIL. GAIL will be implementing the integrated natural gas pipeline tariff of just a little over 58 rupees, 58.61 per MMBtu. This new tariff is 45% higher than the current rate, and it comes into effect from the 1st of April. Two major city gas distribution companies, IGL and MGL, are now joining in to talk about the impact and, of course, their own business. We have with us Mr. Pawan Kumar, Director Commercial at IGL, and Ashu Shinghal, Managing Director at MGL, both of us. Both of you, thank you very much, gentlemen, for being with us on the show this morning. So first things first, we just want to understand the impact of this tariff hike. Mr. Shinghal, you go first. Now, actually, GAIL had asked for an even higher tariff. I think they were rooting for 68 rupees per MMBtu. It's 10 rupees lower than that. But what does it immediately mean for consumers like yourselves?
Good morning, everyone. It's a good move by the government of India, because the unified tariff as such will be beneficial for the industry, and it will reduce the location advantage or disadvantage to any industry. So, although, as you mentioned, GAIL asked for 68, but yesterday's order of PNGRB is speaking about 58. So the impact will be that if a customer has to get gas from, say, Kochi to Assam, after the pipeline is ready, they can almost get it at par with the Zone 3 tariff or whatever zones are decided by the PNGRB. For MGL, it will be, for some customer, it will be a gain. For some customer, it will be a loss, depending on where they are situated. Suppose if they are using lines from two pipeline networks, currently they are being added. But with this integrated and subsequently unified tariff, it will be determined by single zone. So we take it as a positive steps, both in terms of new customers being set up, and also for MGL, we are yet to receive what will be the unified tariff, and then we will compare it with our current tariff and see where we stand with it. But you said, Mr. Shinghal, we are very positive about this step.
But Mr. Shinghal, I heard you say that for some customers, it will get expensive, while for others, it might not have much of an impact. So is it going to be a total pass-through? Will you be passing it on to the end customer? Therefore, no margin impact for MGL?
See, yeah, it will definitely be a pass-through, because tariff, there are two ways to look at it. One is that some of the gas we consume for internal consumption. So that has to be consumed by us. For some which we can pass through, this is a sustainable, continual basis. So we can't keep it on our books. It has to be passed through. If it increases, we have to pass through. If it decreases, we have to pass through.
Okay. All right. Let's get in Mr. Kumar as well into this conversation. Mr. Kumar, what about for IGL? What would the potential impact be?
Yeah, good morning, everybody. Though we are also yet to receive the final impact on IGL, but our preliminary analysis reveals that the input gas cost will go up by say 80 to 85 paise per SCM. And we don't have immediate plans to pass it on to the consumers, because we have not increased the prices for long in the past. We will review these prices as and when Kirit Pari Committee recommendations gets implemented.
So good morning, gentlemen, to both of you, Mr. Shinghal and Mr. Kumar. Mr. Kumar, so you're saying you will hold back?
For the time being. For the time being only. Yeah.
Right. And in your assessment, what is the, for me as a consumer, what is the impact going to be? If you were to pass through approximately, broadly, in percentage terms,
per SCM.
In percentage terms, what would that be?
Maybe in case of CNG, might be 1 rupee per kg.
1 rupee per kg. Does that, Mr. Shinghal, in the ballpark sound correct? Does it seem okay to you?
Yeah, I think we are yet to receive the numbers from PNGRB, but it seems 1 rupees per kg, per MMBtu, per kg in CNG terms is perfectly okay.
Okay.
But as Mr. Pawan said, that it depends on first. Sorry.
Yeah.
on 1st of April, Kirit Parikh committee is also expected to roll in. So we will see price revision with effect from 1st April because these tariffs are also applicable from 1st of April.
What about PNG, Mr. Shinghal?
PNG will be having minimal impact. It is currently 54 rupees per SCM. So around 50 paise or 60 paise per SCM. I mean, we have to do the fine calculation once we know the tariff.
Okay, just to go back to you, Mr. Kumar, you're deciding to hold this hike as of now. How does it play out? Since you mentioned the Kirit Parikh recommendations coming into play, what is the base case expectation that you're going with? And if you do not pass it on, then how much is the margin hit we're talking about with this 1 rupee that you will absorb?
See, I am saying that we will be reviewing the pricing once the Kirit Parikh committee recommendations are in place. So, and most likely these are to be in place from 1st April. So our review will take place after that.
Okay.
There will be some reduction in the input gas cost, and
yes,
whatever increase is there on account of this increased tariff, that will account how much we are passing on to the consumers.
So we're waiting for April then to understand how much will it come down by. But what are you baking in, Mr. Kumar? How much lower could it fall?
In case PNG, this Kirit Parikh committee recommendations are implemented as recommended, I think there will be reduction of around 1.5 dollar per MMBtu if we consider the mix of RLNG and APM, non-APM both.
Okay.
And that will offset, then, I mean, you're saying that will then offset this pipeline tariff increase?
Not the entire. See, that will be the net reduction, but how much is to be, passed on, that will be decided then and there. But in terms of the increased tariff, it will be, there will be annual impact of around 200 to 250 crore.
Okay, so when you say that there will be an impact, you're saying, now this is going to be your discretion, whether then after the Kirit Parikh committee recommendations are public and they come in effect, then you will have to decide whether you want to absorb this 200 to 50 crore impact or whether you will pass it on. Have you come to that decision?
Then we will review.
Okay. Mr. Shinghal, comment on this. I mean, it's very clear that the next big marker for pricing obviously is the 1st of April when the recommendations come into play. What expectations are you going with respect to, what the new regime will announce and will be like?
See, these are good times for the industry as well as positive for customers also, because there are two developments happening. One, that the unification of tariff is happening, which is in the long term good for the industry. And for CGD in specific, if Kirit Parikh committee recommendation is accepted as they are recommended, it is a good sign, as Mr. Pawan said, that maybe $1.5 to $2 per MMBtu reduction will be there, which will be passed on to the customer to a great extent. We will have to overall see the profitability, the alternate fuel cost, and then a final decision will be taken. But definitely 1st April is the cutoff date in whatever happens with respect to the unification of the tariff as well as the Kirit Parikh or the gas procurement cost reductions. We will take a view on that date.
Okay, all right. So we'll wait by then in April, and we'll invite both of you all to join us again to talk about that. But Mr. Kumar, before we let you go, you'll have also announced a JV, IGL and BHEL, for development, manufacturing and deployment of Type 4 cylinders, hydrogen, for hydrogen blending in the city gas distribution and fuel cell-based power backup system. What is the capex that will be going in there, and what is the potential that you're looking at?
Actually, we are just collaborating with BHEL. BHU is a Maharatna PSU, and they have got some land allotted in Banaras. So we are just exploring the opportunity, whether we can manufacture something in India as a Make in India initiative to make the country Atmanirbhar. So the things are at the initial stage. Working groups have been formed, and they will decide and finalize how do we go further.
Okay, we'll have you both back, of course, at your convenience after April once we have the Kirit Parikh committee reports. Mr. Kumar, Mr. Shinghal, thank you very much for joining us with that perspective. 78 points lower on the Nifty. We were down 1995, so there is a 20-point pullback so far. 17,072 is where we are at. Just taking stock of the market. We are back with Vinod Agarwal, Managing Director and Chief Executive Officer.